Okay, I believe we're good to go. People are still joining, but we're gonna start right now, 11:31. So, good morning, everyone, and thank you for joining us for the day on a very important topic that connects with every one of us. It's the future of retail and consumer behavior. I can say it's not a coincidence that we're having this session right after the top 10 strategic technology trends that organizations need to explore in 2020 by Gartner on Sunday, as the innovation in technology is what going to reshape the retail sector and the way we shop. On this point, it's worth noting that ahead of the pandemic, Gartner, our speaker and guest for the last session, has indicated in their 2019's prediction report that by 2020, up to 100 million consumers are expected to use augmented reality in their shopping experiences. And they were right. If you have missed Gartner's session, I would highly recommend that you watch it along with all previous Chamber Talk webinars on our YouTube channel and Facebook page. You can also watch this session in Arabic if you wish so on the link that we shared in the chat box. And please submit your questions to our expert speakers from KPMG, who will make sure to answer as much as possible of it during the last 15 minutes of the session. So the retail sector has undergone a significant transformation over the past decade, and it continues to evolve quickly. The recent pandemic has proved that today's retail world requires flexibility, as flex designs provide the framework for anticipating disruptive trends and impacts. The e-commerce revolution has pushed retailers to rethink their business and operating models and emphasized their need for extended flexibility to adapt quickly to the constantly changing landscapes. There is no doubt that a new consumer is emerging, one that is financially constrained, more advanced in their use of digital technology, more thoughtful and selective in their decision making, and keen to see COVID 19 as an opportunity to reset values in the world. Before the pandemic, consumers have slowly but surely been moving away from strictly shopping for products into seeking a more engaging experience. Probably COVID has accelerated this transformation with a number of emerging trends in the retail sector, driven by a combination of evolving technological landscape and a shifting of preferences of consumers as demographics start to skew younger. By adopting a digital first mindset in both customer experiences and business operations, companies can position themselves to adapt and improve into the future as technology and consumer expectations continue to evolve. It has been noticed that there are a number of post-pandemic technology trends that will be reshaping the future of retail. Those include e-commerce friendly POS systems that cater for fully integrated POS and e-commerce solution. After the pandemic, business owners having multiple sales channels, including both brick and mortar and e-stores, will need to sync both online and offline transactions, inventory, and promotions. The trend also includes machine learning for demand forecasting, especially with many retail businesses are looking to use big data to optimize customer and supplier relationship management. Augmented shopping and the demand for AR systems is on the hype as well, being guided by the try before you buy experience. Data science based personal interaction and machine learning powered engines can make personal recommendations to customers before they know what they want themselves. According to Amazon, 35% of its sales are driven by its recommendation engines. Artificial intelligence and NLP are dynamically progressing as well. Now we have Alexa, Siri, Microsoft Cortana, and Google Home Assistant. Robots, in conjunction with artificial intelligence, are also expected to help retailers cut costs and improve store operations. So all these trends and others are sketching the characteristics of the future consumer and the whole retail sector. Finally, while there will be more talk of an ongoing and future retail apocalypse, and regardless of what challenges the COVID-19 pandemic brings to us, we can think about it as an opportunity for improvement. However, the big question remains, As the economy recovers from the aftermath of the pandemic, which behaviors, if any, will return to what they were like before, which will stabilize for a while, and which will have changed for good? To cover all of the above, we have with us today the experts in the field from KPMG, Anurag Bajpai, Partner and Head of Consumer and Retail, Anshul Gupta, Partner and Head of Corporate Finance, and Vikrant Rohaji, Head of Strategy Group. Before I pass it to the team to briefly introduce themselves and the agenda for today's session, it is worth noting that KPMG has recently published a paper on consumers and the new reality. I assure you it's a must-read study, and I'm certain the team would be more than happy that we share it with you post the session. Anurag, the floor is yours.
Thank you, Sultan. Good morning, everyone. My name is Anurag Bajpai. I am a partner at KPMG. I also head our consumer and retail practice. I've been in the UAE for about 20 years now, and most of that time has been spent working with consumer and retail businesses in the region.
Hi, good morning, everyone. My name is Anshul Gupta. I head up the corporate finance business for KPMG in the region. Like Anurag, this is my 23rd year in the country as well. Prior to this, I worked at HSBC, where I actually started my career as the person covering the consumer and retail sector. I've been associated with the sector for a very long time across M&A, IPOs, leverage finance, structured finance, business plans, etc. And look forward to speaking to you today. Thank you.
Good morning, everyone. I'm Vikrant Rohatgi. I head the Global Strategy Group for KPMG in the Lower Gulf. Over the last 7 years at KPMG, I've been involved in helping many consumer and retail businesses with their strategy and future plans. I've also had the pleasure to drive the firm's thought leadership through our reports and publications, along with Anurag. Before we kick off, some housekeeping points. If we can go to the next page. Today's webinar, as Sultan had mentioned, will run for 60 minutes. We've divided the sessions into three parts. We will start with an overview of the global and local trends impacting the consumer and retail businesses. This will be followed by insights on the recent changes in the consumer behavior and how this is likely to impact the businesses and their service delivery models. And at the end, we would have some time for questions from the audience. As we go through the presentation, there are a few polling questions where we would like to get responses from the audience. We encourage you to participate in the poll by providing your responses on the right-hand side of the screen. All participants will be on mute for the duration of the session. Please type your questions in the Q&A tab on the right-hand side of your screen, and we'll do our best to answer as many as possible. At the end of the session, you will be prompted to complete a short survey. Please take a few minutes to provide your valuable thoughts to us. At this stage, without much ado, I would pass the mic to Anshul to share some insights on what has been happening globally and locally in the consumer and retail space. Over to you, Anshul.
Hi, thanks, Vikrant. So just setting the scene as to what's really happening in the retail and consumer sector globally and locally, regionally. If you look at retail sales have been down across the globe because of lockdown, because of pandemic, and what has really happened, especially to physical retail. But at the same time, if you look at the e-commerce growth, the online market, which has opened up during this pandemic, is exponentially high. Many experts have said that what has happened in last 3.5 months in the online world, the whole world has accelerated by 3, 4, 5 years or so. If we look at airline, because all the airports were shut down, all the passenger travel was restricted, clearly it had a big impact on the airline, and that's a big pivot for us in the region as well. But when we look at what's really happening on the capital market side, one has really seen some successful listing within the retail and consumer sector. JD.com got listed on Hong Kong Stock Exchange, while Broom listed successfully on NASDAQ. Coming close to our hearts on the tourism side, clearly because of lockdown and aviation, the tourism industry across the globe came to a grinding halt. Again, talking about the apparel retailers category, clearly significant decline to be seen over there. And as we have all seen all over the world again, as a result of pandemic, economic downfall, several jobs were lost. So at the last count, US itself was 44 million, and we are kind of looking at a global number exceeding 50 million. And again, talking about the physical retail where I had started, one has seen a lot of big brands like Aldo, JCPenney, Debenhams filing for bankruptcy amidst what's really going on in the economic world. Next slide, please. If we look at closer to home, what's really happening as a backdrop to the global side, again, online marketplaces, online commerce, e-commerce, number of apps download, video games, gaming industry, all that has got traction. If you look at rents, which were already kind of started to decline at the start of 2020, we have seen that go down further, and time will tell how that really pans out in short to midterm going forward, depending on the economic outlook. Tourism industry, as we mentioned in the slide before, has faced huge challenges. But as the world opens up, UAE is also starting flight effective 7th of July. I've read about BA, KLM, Air France, etc. flights starting their options as well. That is some new development which we all are looking forward to. How that brings in new footfall, new tourists, etc. back into the country. But as a result, the impact on consumer spending has been huge. People are quite cautious, and that's why the consumer spending has really been hit quite dramatically. One of the big theme which was coming into 2020 was Dubai Expo 2020, which was a landmark event which was going to happen, bring in new footfall, bring in new tourism. That unfortunately, because of again pandemic, had to be postponed to 2021. Government has given a lot of stimulus to the economy. We are hoping to see it trickle into the real economy and see consumerism pick up, hopefully. Food and beverage, again, an interesting story. On the delivery side, it has been really hit. On the delivery side, it has done well, but on the physical side, it has really done badly because of, again, lockdown. And reduced oil prices has had an impact on the overall economy because people are not coming out, people are not spending, governments are not spending. The overall impact because of, especially in our region, has been quite substantial. Next slide, please. But while we talk of what's really gone bad in the last 3.5 months, nevertheless, these are some of the headlines which we picked up from various media journals as to what has really happened to all the companies, focused companies which we really are growing. So if you look at some of the physical world or you look at the online world, clearly Mubadala investing $1.2 billion in Geo tells you that these kind of transactions did happen during pandemic. If you look at startup investment, clearly in themes related to consumer spending, payment gateway, cybersecurity, etc., all gained traction. If you look at Dubai-based gateway partners, made their investment in Tim Hortons. We have seen Abu Dhabi's ADQ buying Nabil Foods. We've also read about Bin Dawood holding in Saudi Arabia, which is a large supermarket chain, filing for an IPO over there. So this is quite interesting that while the doom and gloom was happening, there was a certain framework wherein a lot of new money has flown in as well. Next slide, please. Now, this is an interesting list which was published by Financial Times a couple of weeks back as to which are the companies and what they have done during pandemic. And if you look at Amazon, obviously clear representation of the e-commerce market globally, Amazon added almost $400 billion in its market cap during this time. And if I look at information technology companies, whether it's Microsoft, whether it's PayPal, whether it's Shopify, all these companies aided consumers. They enabled consumer behavior, they enabled the e-commerce, they enabled cybersecurity, etc. So which has been again very accretive to their own market cap. I'm sure Zoom has become a household name during pandemic. All of you must have used it in some form and shape. So clearly there are companies which have gained real traction. And I would also like to highlight that in this top 100 list, there was a company from our home, Abu Dhabi, which was also ranked in this list, number 56, which got about 12.5 billion added to its market cap as well. Next slide, please. If I look at e-commerce penetration across countries, now this is very interesting that despite the growth which has happened, if you look at UAE penetration of e-commerce, we are still quite far away. If whether we look at China, so we are 1/6 of China today. If I look at Germany, we are less than half of Germany. And that clearly signifies the potential which still is out there for us to capture from an online world. And how does this online world come with a physical world? I will pass on this to Anurag to explain, and he will talk about it in the future slides.
Anshul, thank you. Now, sort of what we'll do now in this part of the presentation, we look at some of the trends that Anshul's already spoken about. We'll sort of maybe dive a little deeper in some of the trends. We'll also look at some of the challenges we're seeing with retail and consumer companies in the market. And we will also talk about some trends on consumer behavior and on and within the retail space. So within different segments of the consumer and retail sector, there have been some sectors that have done better than the others. So while we look at food and grocery retailing, they had a pretty strong growth in the first few weeks and months. There were significant demand spikes. What we've seen lately is demand stabilize. The initial demand was on account of people working from home. There was panic buying. What we've also seen online retailing see very strong growth. So if you're a pure play online retailer or your online marketplace, you've seen growth in certain segments in excess of 40 to 50% over the last few months. And again, this is people taking to shopping online from the comfort of their homes, and people still being concerned about safety and security, and generally not going out and shopping from secure premises within their homes. What we've also seen with physical retailers with online presence, and be it in the grocery segment, be it in the fashion segment, be it electronics, we've seen some of these retailers accelerate their online strategy. So numbers that they had set to achieve in the next 2 or 3 years, they've achieved in a matter of a few weeks. We've seen their online sales numbers increase exponentially. Again, like Anshul said, coming up from a very small base, but we've seen this number increase from anywhere from between 2 times to 4 times of their sales again in the last few months. Coming to the non-essential retail, and a number of sectors within the non-essential retail has been negatively or adversely impacted. So be it a restaurant, electronics, automobiles, all of them have seen a significant hit to their numbers. And the numbers in Q2 are on average are down from 30 to 40% and even more in certain cases. However, what we are seeing is since markets have started to reopen, and now it's sort of close to 2 months since shops have started reopening, we've seen some consumer confidence come back, and we've seen numbers that the retailers generate improve on a week-on-week basis. and that's a positive news. What we've also seen with retailers is and consumer companies, that while their sales were sort of falling or decreasing, a lot of them took rapid action to protect and safeguard their profitability. So in certain cases, the impact on profitability is not to the extent of the drop in sales. They've managed to some extent, control their profits. Moving on, and I think this is a slide where I'll get some thoughts from you, and if you can go to the next slide. So this is a poll, an audience poll that we're running, and the question that we're going to ask you is, in the current environment, which is your topmost concern for your business? So if you look at the right hand side of your screen, you have 4 options on the question. Maybe if you can take 30 seconds to answer this question, and I'll give you 30 seconds, then we'll see what the general consensus is. I think for some reason it shows 5, but I think the time shows 5 minutes. It has to be 30 seconds. So I think moving on, and I think I'm getting some sense of the responses that I'm seeing, that business continuity is a key challenge for a number of retailers. I think from all the responses I've got, business continuity is top of the mind, and I think this is pretty consistent to what we have seen in our interactions. If we can go to the next slide. For all retailers, apart from the cost of inventories, salaries and rentals are their top expenses. A lot of businesses were able to control their salary cost pretty quickly. However, rentals have been more difficult. With a lot of landlords, rental deferral was the first option. But we've seen over time a number of retailers have conversations and negotiations with their landlords. There's been some success. We've seen some major landlords set up funds for rent relief to their retailers. Based on the conversations we've had retailers get rent relief anywhere from 2 months to 4 months, and in certain cases these negotiations are still happening. What we've also seen retailers do is to negotiate with the landlords to move to a variable rental model for at least for the next few months, and that gives retailers flexibility to manage their cash outflows. What we've also seen helpful for a lot of retailers has been the government support that they've got on rentals and also on license fees and other promotion expenses. What has also helped is the support retailers have got from banks, and this is on account of the central bank mandate. So a lot of retailers have looked at, and consumer companies have looked at renegotiating their facilities, and those discussions have been progressing well. One of the other concerns we've seen with businesses in the current environment is the concern about health and safety. For some businesses, it is mission critical to ensure the health of their employees and the health of their customers. But what we've also seen happen is, because of this compliance, there is increased cost that retailers have to bear. And in an environment where margins are already under pressure, this is putting pressure on the bottom lines. Inventory management, another area of concern for retailers. And again, it depends on whether you're an essential or a non-essential retailer. For a non-essential retailer, the challenge is having significant amounts of inventory, and how do you liquidate that? We've seen retailers think about promotions, discounts. We've seen retailers look at the orders they're placing with their suppliers, and can they defer the orders? Can they delay? Can they reduce these orders they are placing? And what we've also seen in case of essential retailers is people look at alternative sourcing of products, because in certain cases they've had demand spikes that they've had, and which have been difficult to meet from the current set of suppliers. One of the other challenges also for the segment is with changing consumer behavior, especially in case of businesses that did not have an online presence. There was a rush to go online to meet the demand. Also, we've seen challenges with last mile delivery for a number of retailers, and the whole infrastructure of the last mile delivery was under pressure for a number of weeks. I think now it's beginning to stabilize. Also with retailers, the challenge continues to be of how do you give your online customers the same experience as walking into a physical retail store. Moving on. And we have a question for you again, and the question is about and this is, a lot of people have speculated on this, but what we would like to hear from you is, in when do you see the recovery for your business back to the pre-COVID levels? So are you looking at recovery in Q4 or sometime in 2021 or further ahead in 2022? So again, if you take maybe 30 seconds to respond, and then we can sort of talk through some of the responses. Okay, so I think now I'm sort of beginning to see some of the responses. People are increasingly looking at first half of 2021. So people think that the next 6 months of 2022 is about starting to show some signs of recovery, but the real sort of improvement will start happening from next year. And this is pretty similar to the other conversations we have in the market, and when we talk to our clients. If we sort of move on to the next slide. So we at KPMG look at, and this is for all businesses, see businesses having to pass through these 4 phases of recovery, from reaction to the new reality. The reaction phase was the first 4 weeks of the crisis, largely about managing cash flows, managing liquidity. How do you optimize your workforce? How do you ensure the health and safety of your workforce? Once and this was over the period of the lockdown. Once the lockdown started easing, we saw businesses move to the resilience phase. The resilience phase was about doing everything and anything possible for businesses to continue to operate. And what we have seen over the last few weeks, with the restrictions easing and the economy starting to open up, a lot of businesses are moving on to the recovery phase. And the recovery phase is all about the economy stabilizing. We start seeing slow regrowth in some sectors, but also operators are beginning to find or acclimatizing to work under the current environment. What we'll also see is people moving on to new reality. And I think one thing that I like to highlight is these 4 phases are not necessarily sequential. So even though a number of businesses over the last few months have been in the resilience phase, they have been thinking about recovery and the new reality, and what changes would they have to bring to their business and to the operating model to be ready for this new reality, right? We all know that there have been a number of trends that have been accelerated. We know consumer behavior is changing. So how, as a business, are you going to be ready for the new reality? And the businesses will have to take some actions, and we will talk about some things that we would recommend businesses to do as we go along in our presentation. If we move on to the next slide. And the changes that we've just spoken about link in pretty well to the 6 drivers of consumption. So these are the factors that we believe make consumers buy. So what is driving their purchase behavior? So the number 1 factor, and this happens every time there is economic uncertainty, is price. Based on a survey that we conducted, and this is the survey Sultan alluded to earlier. So we ran a consumer survey, and based on the responses we've got, 63% of the consumers view price as an important factor in their purchase decision. Also, the absence of an online sales channel for a number of retailers will be an hindrance. And we have seen that happen in the UAE across different segments, where a number of retailers had to activate plans to go online because it didn't have an online sales channel in the initial days of the lockdown. We've seen convenience, and convenience has always been an important factor. How can consumers access your products and services easily? We've seen convenience retailing do well in the crisis. So neighborhood shops, community malls have done well. Experience, another important factor, especially when you have consumers that are going online. How do you continue to engage them? How do you wow them? Choice, and again, choice. If you're an online retailer like Amazon or some of the other online retailers, you can give your consumers unlimited choice, but that comes with a cost. And if you do not have the scale, maybe supply chain inefficiencies. However, what we have seen is retailers who have limited offerings or curated offerings have also done well. And if you cannot offer your consumers unlimited offering, then maybe you have to be very selective about the choice and about the products you choose to offer to your consumers. Purpose again has always been important, but over the period of the crisis, consumers have been very conscious about whether the companies they deal with have been good corporate citizens, whether they're living their values, and whether they're contributing to the community. And also what we have seen is privacy become important, both privacy and trust in an online world. Can consumers trust the company with their data? Also security and safety in the physical world. So when a consumer walks into your shop, how can you keep him safe? How can you also keep your employees safe? Moving on. So I think we have picked up four trends that we believe retailers will have to focus when they move from recovery to the new reality. First, we see business models are evolving, and we've seen retail business is increasingly not just only about buying and selling. The capabilities required for businesses to succeed are expanding. You need capability in artificial intelligence, data analytics, last mile delivery, logistics. And we've seen a number of retail businesses partner with other companies, technology companies, platform businesses, because they believe they do not internally have this capability to do everything. And we will see this trend continue to increase. What we've also seen, and we've spoken about it a little earlier, purpose for companies becoming increasingly important. One of the other trends that we are highlighting here is for retail and consumer businesses to rethink their cost of operating. And businesses will have to think beyond areas that they've traditionally thought. Technology can be one area that can be leveraged for them to get more efficiencies from their business. And lastly, we've spoken about choice and about how businesses will have to make the choice between whether they want to offer people unlimited offering or have a more curated, limited, and a well thought out product offering for the consumers. The advantages of a well thought out offering: it helps you reduce cost, it improves customer satisfaction, and it also improves the efficiency of your supply chain. With that, I will hand over to Vikrant, who will talk about a little more about certain consumer trends that we see. Vikrant, over to you.
Thank you, Anurag. As Anurag has mentioned, the drivers of consumption are fast evolving, and COVID-19 has accelerated few fundamental trends within the sector. Now let's look at how consumer behavior has been changing and what it would mean for the sector. Anurag and Sultan had talked about the survey that KPMG has conducted. Based on our analysis, we see four archetypes emerging during the crisis. There are those who have been hit hardest by the crisis. They are spending significantly less across categories and are not optimistic about the future. This segment of consumers would be about 20% in total. Then there are those consumers that have been impacted by COVID-19, though not as significantly economically. Yet they continue to be concerned about the future and are spending more cautiously and primarily in the essentials category. This is where majority of the consumers sit, about 40 to 45% of the consumers. The third category of consumers are the ones who are financially stable but spending somewhat less than in the past. These consumers have cut down on some of their discretionary spend and are looking to save money to create a better safety net for the future. The segment would be about 25 to 30% of the consumers today. Last but not the least, we have a relatively younger and moderately affluent consumer who've not been directly impacted by the crisis. And with the restrictions lifted, it is looking to spend across categories. They are most eager to shop and to socialize while modifying behaviors to maintain social distancing protocols. This segment is small, sub 10%, but it is definitely a growing segment today. If you were to move to the next slide, now let's look at where are consumers shopping today and how they're spending their money. Very clearly, it is online. While Anurag and Anshul had pointed to this, even Sultan had mentioned about this, the shift towards online shopping cannot be overemphasized. Many consumers have moved to online shopping as a way to maintain social distancing protocols, and our survey suggests that some of the spend will continue to remain online. Consumers are also using less of cash today when compared to pre-COVID purchases and more of debit cards, credit cards, and most importantly, digital wallets. As restrictions are lifted, consumers have indicated that they will be more comfortable in smaller social settings such as visiting friends or going to a restaurant and are less likely to visit more crowded spaces such as malls or movies. Shifting gears and talking about the evolving dining and takeout habits for the consumers, while we've talked about how F&B sector has been significantly impacted, it is not all doom and gloom when it comes to dining habits. 1 out of 6 consumers have indicated that they would return to their pre-COVID dining out frequency pretty soon as the restrictions have been lifted. As mentioned earlier, restaurants with the right safety measures are viewed as safer and smaller social settings by the consumers. Furthermore, 1 in 3 consumer has indicated that they will be spending as much or more in dining out as in the pre-COVID days. These are positive messages for the F&B sector and certainly something to look forward to. That said, concerns around health and hygiene do impact the sector, do impact the market. Around 2/3 of the consumers have looked to reduce ordering in during the lockdown, and some part of this trend is likely to continue in the coming months. In general, there are continued concerns around health and hygiene, whether it is at the restaurant or for the delivery, and it will take a while for these concerns to subside. If you were to move on, so what's really driving and influencing consumer decision to visit a store or to buy online? Based on the survey that we've conducted, the answer is very clearly price and convenience. Anurag had talked about the 6 drivers of consumption a short while ago, and we can see that it is these factors that influence consumer decisions. Whether it is online or in store, grocery or non-grocery, consumers view value and convenience in terms of shopping from home or proximity of the store, or even convenience of navigating through the store as most important factors. For online buying, consumers also look for safety and security of the channel or the website, particularly when it comes to grocery retailing, and choice and variety offered by the non-grocery retailers. So as we've seen, COVID crisis is changing consumer behavior and preferences. And what they expect from the businesses. It is now time for the businesses to address this ask from the consumers. So what are consumers asking for? Whether it is retail or F&B, social distancing and sanitization are the topmost requirements set by the consumers. They want adequate space between aisles and fixtures in a store. They want sanitization of shopping carts after every use, physical distancing between tables at a restaurant, and minimal contact whether in the store or for delivery. It would be challenging for businesses to address these requirements and still maintain the customer experience due to the challenges around the limited capacity as well as longer wait time. Importantly, and as Anurag had earlier mentioned, it would also lead to increased cost of compliance for the businesses. So what should the businesses be doing? It will require a change in the service delivery today. And many retailers globally have started leveraging technology to do that. Retailers have looked to combine online and offline engagement, where ahead of the visit, the customer schedules a store visit online and shortlist products that they would be interested in. So when they visit the store staff is ready to greet them, show them their preferred products, and perhaps also cross sell. This is how physical retail is going to be blended with the online and can leverage technology. This will be the new physical and digital reality, as we call it, phygital reality. Apart from this, retailers are looking at self-checkout, cashless transactions, direct warehousing to customer shipping for online orders particularly, and even drive-through and pickup windows. None of this is new to the sector, but it only gets accelerated with the changes in the consumer behavior and their requirements and concerns. On the F&B side, again, app-based reservations have gained ground across the world. Outlets are also providing contactless entry while planning for limited capacity. Digital as well as disposable menus and cashless transactions are also being used by operators globally. So it would be important for consumer and retail businesses to rethink their service delivery model, as some of the consumer behavior and their concerns, importantly, will only change gradually if they change at all. With this, we come to the end of our presentation. So if we were to, we've discussed a lot of aspects around the changing face of consumer and retail sector. It would be good to just recap some of the key highlights here. While some of the segments have witnessed strong headwinds, there is still opportunities to invest and grow. Online retail is the single biggest disruptor as well as opportunity emerging from the COVID-19 crisis. It is time for businesses to embrace this change before it is too late. Value and convenience are the key drivers of consumption today. Consumer and retail businesses also need to rethink their operating model more so today than ever in the past. And finally, while consumption has been impacted during the restriction period, we do see signs of recovery in consumer confidence. And now it's really up for the businesses to do a bit more to maintain and grow this confidence. With this, I would like to open the virtual floor for questions. Over to you, Sultan.
Thank you, Vikrant, Anshul, and Anurag for the insightful session. I'm going to start with a very important question for Anshul. So, Anshul, what can businesses do today to prepare for discussions with the banks around restructuring of their facilities post the current 6 months deferral period?
I think let's take it in two instances. One, banks are in the business of lending. So it's not that they don't want to lend. But at the same time, given the economic backdrop, given where the sectors is coming from due to pandemic, one has to look at the change, as Vikrant and Anurag alluded to. One has to have the right business plan in line with where the consumer behavior and sentiment is going. And once you have the right plan, you can exhibit to the banks how your business is going to grow, I don't see any reason why the lending behavior would change. Obviously, one has to look at the right numbers, the right payment schedule, the right amortization structure from a bank's perspective. And if that all falls in line, I'm pretty sure all the banks would look favorably towards any such proposal. But again, I would emphasize that the plan has to be rightly written, well communicated, and well thought through before you present it to any lender.
Thanks, Anshul. A question for Anurag. What are retail businesses doing to survive and sustain themselves in the current environment? So from your experience, from what you've seen on the ground, you've already mentioned a lot of trends in the market and you've done your survey. So in general, and I want to categorize this to the UAE in specific and probably to Abu Dhabi. What businesses are doing to survive?
So, Sultan, I think that's a sort of very good question. I think very relevant for today's market. So, I think broadly, I think there are 3 or 4 things we've seen businesses do. So, first is it has to be managing liquidity, managing your cash flows, right? See where can you reduce your cost of operating. And we've spoken multiple ways. We've seen rentals, salaries, discretionary expenses. We've seen people or retailers look at location rationalization. So do they need, and especially with the changing consumer behavior, we've seen some people are not reopening shops, right? Once they've reopened, they haven't reopened all their network because maybe now they believe that some of their outlets will never make money because so I think that whole rethink has to happen around your portfolio and locational rationalization. We've seen people do that. What we've also seen retailers do is take stock of changing consumer behavior and what changes do they have to do internally to their own operating model. So do they have a right online strategy? Do they have an online presence? How can they maximize their potential online? And I think that is what we've seen people spend a lot of time think through. What we've also seen retailers do is plan for different scenarios, right? So the traditional planning of long term quarterly plans or seasonal plans have all gone out of the window. People now look at cash flows on a weekly basis. Decision making has become more agile. They've cut through the bureaucracy. They're looking at different scenarios and how, because there still continues to be a lot of uncertainty with how recovery would happen, right? When do tourist arrivals start? When do people are more comfortable to save, to shop, and when do people sort of start going back to the malls, or do they continue sort of buying online? So I think a combination of these factors are very important for retailers to consider, and we've seen from our interactions, a lot of retailers are doing these things.
Thank you, Anurag. Very interesting. You've covered it all, I would say. Vikrant, you've mentioned in your part of the presentation about technological trends and what companies can do from that aspect. So, how can consumer and retail businesses use technology to their advantage, knowing that this is going to be a costly investment, I would say, in the current situation, especially for SMEs? Which tool they need to pick, for example, that fits their operating model, and most importantly, I would say, for the brick and mortar stores which haven't yet have e-commerce, is it too late for them to start upgrading their customer experience?
So, Sultan, it's firstly, I mean, it's never too late. I think the opportunity, as Anshul had also, alluded to earlier, e-commerce is going to continue to grow in this market. So it's never too late to get on e-commerce. Otherwise, retailers will miss out on that opportunity. The costs are an important factor, but at the same time, you need to still manage the customer experience, which is where the phygital reality that I was referring to will become an important element. And it really is about you have your physical stores. You need to blend a bit of online to offer a more integrated solution to the customer, to also address some of their concerns around longer waiting time. Now, if I have limited capacity within the store, how do I manage? Now, my customer wouldn't want to move around the store, because of certainly certain hygiene apprehensions in the near term. So to address all of those, I think another element of technology is, and that is not expensive at all, is around the trend towards contactless payments. So there is a survey done by Mastercard recently, where over 80% of the consumers have indicated that digital wallets and contactless payments are their preferred mode of payments today. So I mean, consumers are asking for it, and I think retailers will have to offer some of that flexibility, leveraging technology going forward.
Thank you, Vikrant. I believe we still can get 2 or 3 questions. We'll see. It depends on the answers. I'm gonna pick a question now from Cohen. Sorry, I've forgot to mention the names of the previous question owners. So, if consumer behavior is moving more and more towards online shopping, what's the future of the brick and mortar stores? And do existing malls need to repurpose their retail space in the future?
Absolutely, absolutely. I think malls will need to, just like the retailers are changing their model, malls will also need to reinvent themselves to survive. And I think, again, just going back to, we talked about the 6 drivers of consumption earlier. Anurag had talked about it. I would pick 3 of those that would be very relevant for malls: value, convenience, and experience. So, I mean, either you sort of address and cater to a customer segment that is very value driven by offering value retail propositions within the mall, or you offer convenience, which is about the community malls, where it's a smaller setting, it's nearby within a community. So that option. And the third is the experience, where you need to blend. It needs to be more than just shopping and eating out at the mall. It needs to be more than that. It needs to offer that experience. Those 3 elements would be critical for mall operators going forward.
I think if I may just add, Sultan, and I think I have met Quinn, and he's been associated with FNB for a long time, if my memory serves me right. I think we have already seen that. If you look at the floor plan for Dubai Hill Mall or a Nakheel Mall, etc., the GLA which is attributed to food, cinema, experience, because let's not forget, all of us are social animals eventually. We need a place to meet, discuss, talk, and enjoy. I think so. To his point, I think, and to Vikrant's third point of experience, I think we all need that social experience. So I see malls having higher weightage towards experience and lesser weightage towards physical retail, which we have already seen, and I would see that mix even getting skewer towards experience in the future.
Thanks, Vikrant and Anshul. I believe we're gonna see this in the near future. That the changes is gonna be something that we're gonna experience. The next question, Anshul, I believe it fits your area of expertise in the corporate finance. So, in the current environment, what factors need to be considered by potential investors and buyers? Because I mean, let's not forget. Yes, there is a problem. The sector is under stress, but this is as well an opportunity for potential new entries. So, what factors need to be considered?
I think, one of the slides which I had presented, from a deal activity perspective, I don't think so we have seen a slowdown. Now, where the challenge, it kind of comes back to human behavior of, I want to create a business, I can see growth in something, but whether I'm ready to ink the paper today or not. Now, the whole question from an M&A or growth perspective comes that it's not about how you're looking at the region or the country today, how you're looking at over a period of time. And if your vision is quite clear, now the only challenge is subject to how this pandemic pans out, which is a big variable I can understand. So the way we are looking, look, if you can share the risk of this uncertainty, and if I am as a buyer believe that this region will give me the right returns, it will give me the right economics, then there's no reason for me not to use this current opportunity. So let's not waste this crisis if we have the right focus from a mid to long-term view of the nature. And that's why you see some of these deals still happening. That is one part. Second part, money has never been cheaper. Globally, if you look around, there has never been cheaper money. There's been no, we live in many countries in an era of negative interest rates. So if you can make that arbitrage of taking equity risk with the borrowings which are at lowest ever, it kind of gives you the best arbitrage to make. So what it needs is the right transaction structure, the right long-term perspective. And even if I look from a seller's perspective, why should seller sell? I think the whole thing comes back to the focus. Where is the seller's focus? Should I be in tourism and retail? Should I be only in retail? Should I be looking at industrial? So it's all about demand and supply and how everyone looks at their own strength. So I would say it's the right time to look at the activity. It's the right time to hire the right advisors and make sure that your transaction structure balances out the risk, which is quite a big variable in today's times.
Very interesting. Thank you, Anshu. I believe we can still cater for one more question, and it's going to be for Anurag. We have a question here from Nitin on the government packages. I believe this has been mentioned in the presentation in terms of the rental rebates fund and the other initiatives in terms of deferral of facilities and so on and so forth. So the last question for this session, Anurag, what are the key learnings for retailers from the current crisis?
So I think in our from our view, I think there are a few things retailers can sort of take from this crisis, and I think we've alluded to that in our sort of presentation. I think one of them is to look at the possibility of partnerships, right? Historically, we've seen retailers try to do everything that they have to do, internally. Given the complexity, I think it's going to be increasingly challenging for retailers to do it all themselves. So they have to collaborate with, be it other companies, platform businesses, tech companies, to have the capability to cater to the demands of the new reality. I think that's one key learning for a lot of retailers. Secondly, is about this whole cost of doing business. Margins are under pressure, and COVID will further sort of accelerate this trend. We spoke about the drive towards value and how value for money for consumers has become a key purchase driver. So how can businesses look at the cost of their operations, and also increasingly use technology that wherever they can to sort of leverage and help them. And the third bit is about, do you know your consumer, and do you know how his needs are changing? So we see from our experience, a lot of people have collect consumer data, from different parts, but are you leveraging that data? Are you using that data to give you insights that can drive your business? Is a big question mark for a number of businesses.
Thank you, Anurag. Vikrant, I'm going to pass it for you for a final word before I close.
Thanks a lot, Sultan. We would like to thank all the attendees. Thank you for spending your time with us and making this an engaging session with your questions. On behalf of KPMG, we sincerely hope that you found the session to be fruitful investment of your time, and we look forward to connecting with you again in the future. Thanks a lot, everyone.
Okay, thank you. Thank you.
I want to thank you as well, Jens, for the insightful session, and to thank the audience as well for this 1 hour investment, as you refer to it, Vikrant. Next week, we have very interesting topics with PwC and Deloitte. So on Sunday with PwC, we're going to discuss managing fraud risk, how to prevent the global pandemic from becoming a fraud pandemic. And on Tuesday, we have with Deloitte Liquidity Solutions, how optimal cash and working capital management can improve liquidity. Until then, stay safe and see you next week.
Okay.
Bye.
Thank you.
Thank you.
Thank you.
Thank you, guys.
Pleasure to be here.
Thank you, guys.
Thank you.